Bang! Hey gang, I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough illustration of how to properly classify balance sheet accounts. So if you're unfamiliar to what the balance sheet is, don't fret gang, I dropped a link to get you up to speed in no time. So with that being said, let's get it. Alright, for each account listed, identify the category in which it would appear on a classified balance sheet using the following categories: current assets, long-term investments, property, plant, equipment, intangible, long-term liabilities, current liabilities, and stockholders' equity. If the item does not belong on the classified balance sheet, put an X on it. Alright gang, so we are trying to finalize how to properly classify accounts for a classified balance sheet. So a classified balance sheet is a little more detailed because it breaks down each particular asset in its proper account. Remember, our balance sheets must be reported as current assets or long-term assets. And there's a particular order of liquidity in which they should be reported. And so we're going to go through this particular problem to identify such order. So in terms of liquidity, we're talking about how easily it can be converted into cash. So obviously, the more liquid assets will always be reported first. And when we're talking about current assets, we're talking about assets that convert to cash less than a year or operating cycle. If it doesn't convert to cash within a year or operating cycle, it's considered a long-term asset. So, same rule applies with liabilities too, gang. Any liabilities that's paid off within a year will be considered a current liability. If it's not paid off within a year or operating cycle, it must be classified as long-term. So let's look at the first account, land used in operations. How are we going to report this? Well, since this land is being used to operate the business, we know that we're going to keep this on the books longer than a year. Thus, it will be considered a long-term asset. But within the long-term assets, we have different categories. We have long-term investments, property, plant, equipment, intangible assets as well. So our long-term investments are going to be those investments that we held on the books longer than a year. PP&E, property, plant, and equipment, will be those long-term assets that help us operate the business, thus creating revenue. Now, since land is used in operations, we're going to classify that as a PPE account. Property, plant, and equipment. Next, accumulated depreciation equipment. Well, we know, gang, that accumulated depreciation is a contra account to whatever that asset is being depreciated. And we know that we only depreciate long-term PPE accounts. Therefore, since this is a contra account, this is going to be considered a property, plant, and equipment account as well. Next, common stock. We already know that, gang. Common stock is a part of stockholders' equity. So we're going to put it in the stockholders' equity account. Next, service revenue. Service revenue, that ain't it. That is not considered a particular stockholders' equity account. Now, does service revenue affect stockholders' equity? Yes, it does, but it affects it indirectly through retained earnings. However, since it's transferred through the statement of retained earnings via to the balance sheet for the new retained earnings account, we are not going to report service revenue on the balance sheet. So we're going to put a big fat X on it. Next, investments in Starbucks Corporation held to be long-term. Keywords held to be long-term, so we know that this is a long-term asset. However, it's an investment into another company. So particularly, we're going to classify this as a long-term investment gain. Next, accounts receivable. We know what accounts receivables are. Easy breezy. We're going to go ahead and report that as a current asset. What about equipment? It's already in the title, gang. Property, plant, and equipment. Long-term asset. Buildings. Same rules apply. This is considered a plant asset. Therefore, we're going to report that as PP&E. Notes payable due in 10 years. The key words, gang, due in 10 years. Since it's due in 10 years and the last name is a payable, we know it's a liability. 10 years letting us know it's a long-term liability. Unearned revenue. We know unearned revenues ain't revenues, gang. We know unearned revenues are actually liabilities. And more importantly, we consider these unearned revenues to be short-term liabilities or current liabilities unless otherwise specified. Next, cash. Easy breezy. We know that's a big old fat current asset.
Dollar bills, y'all.
Accounts payable. We know that that's a current liability as well, gang. What about prepaid rent? Prepaid rent happens to be an asset. What type of asset? A current asset, unless otherwise specified. Dividends? Will dividends be reported on the balance sheet? Nope. Why? Because dividends has already been transferred through the statement of retained earnings. Therefore, we won't double count it or report it on the balance sheet. So we're going to put a big old fat X. What about land held for investment purposes? What's the key word? Investment purposes. So we know that this is going to be a long-term investment gain. And last but not least, depreciation expense. It's an expense. It doesn't belong on the balance sheet. It belongs on the income statement. So we're going to put a big fat X there. We're going to check our answer. Well done, gang. So there you have it. A quick, easy illustration of how to properly classify our assets, liabilities, and stockholders' equity accounts for the classified balance sheet. We're setting the tone to get up there with the big boys and do financial reporting at its finest. So with that being said, if that light bulb clicked and brought you closer to chasing the bag, hit the like button, hit the subscribe button, and share the channel with your friends. Don't be stingy, gang. As always, I'm Dr. Who, and I'll see you soon. Bags!